Okay, the digital nomad life. It sounds amazing, doesn't it? You know, the freedom, the travel, maybe even saving some money. But there's this whole other side, this hidden complexity, navigating international tax laws. It's honestly not just admin, it's like critical for making this lifestyle actually work long term.
Absolutely. And that's really our mission in this deep dive. We want to give you, if you're a U.S. or Canadian nomad thinking about, say, Mexico, Costa Rica, or Portugal, for 2025, some practical intelligence. Kind of like a compass, right, to help you steer clear of the big traps.
Yeah.
Like accidentally becoming a tax resident somewhere you didn't plan to, or getting hit with unexpected tax bills. It's about making the dream sustainable.
Okay, let's get into the destinations then. They each have a really different feel, and maybe more importantly for this chat, very different financial implications. Mexico, it's culturally vibrant, super close to the US and Canada, and generally the most budget-friendly. You could maybe live comfortably for, what, $1,500 to $2,000 a month, even less if you're frugal. But here's the catch, right? No specific digital nomad visa. So you're likely looking at the temporary resident visa, which needs around $2,600 a month in income, give or take, or substantial savings, like over $40,000.
Then you've got Costa Rica. Everyone knows Pura Vida, the amazing nature. And they do have a proper digital nomad visa. Requires about $3,000 a month income for one person. And here's the really interesting part, the key benefit. You get a full exemption from Costa Rican income tax on your foreign earnings. That's huge. Cost-wise, it's sort of middle ground, maybe $1,500 to $2,000 a month for comfort.
Yeah, that tax exemption sounds like a game changer. And number three, Portugal. Gateway to Europe, high quality of life, you get that Schengen area access. They have the D8 digital nomad visa, which looks like a solid path to EU residency eventually, but it's definitely the priciest of the three, needs around 3,483 day a month income.
Exactly. Now, this is where people often get tripped up. Tax residency. It's not just about counting days, like that magic 183-day rule everyone talks about. That's just a guideline, really. Mexico, for instance, uses what they call a center of vital interest test. So if your main work is based there, or if more than half your income comes from Mexican sources, boom, you're a resident. And if you are, Mexico taxes your entire worldwide income.
Wow, okay. Not just local income.
Right. Portugal's also a bit tricky. Yes, they have the 183-day rule, but they also have a habitual abode test. This means just showing you intend to live there, like, I don't know, signing a long-term lease, could be enough to make you a resident. And again, like Mexico, Portugal taxes worldwide income if you're deemed a resident.
So, okay, that's the host country side. How does our home country tax system, US or Canada, fit into this picture? Because you're often dealing with both, right? For US nomads, well, the US taxes its citizens on worldwide income, period. Doesn't matter where you live. Your best friend here is usually the foreign earned income exclusion, the FEIE. For 2025, it lets you exclude up to about $130,000 of income you earn while working abroad. You generally qualify by being physically out of the U.S. for 330 days in any 12-month stretch, or by proving you've set up a permanent home abroad for a full calendar year. But remember, it's only for earned income salary, freelance income, not investment gains or dividends.
Right. And for Canadians, it's different. Canada uses a residency-based system. So the main goal for a Canadian nomad is usually to become a non-resident for tax purposes. This means really cutting ties.
Right.
We're talking significant residential ties, like selling your primary home in Canada, making sure your spouse or dependents don't stay behind. It needs to be a clear break.
Well,
And Canadians also need to watch out for the departure tax. Basically, Canada might tax the accrued gains on certain investments as if you sold them right before you left.
okay, so the nightmare scenario for everyone is probably double taxation, where both countries want a piece of the same income.
Exactly. That's the big fear. But there are mechanisms to deal with it. Tax treaties are key. They have tiebreaker rules designed to decide which country gets primary taxing rights if both claim you as a resident. For U.S. folks, if the FEIE doesn't apply, maybe you earn too much, or it's the wrong type of income, there's the foreign tax credit, or FTC. It gives you a credit, often dollar for dollar, against your U.S. tax for income taxes you've already paid to a foreign country. Canadians have a similar foreign tax credit system. But, and this is really surprising and super important, the U.S. does not have an income tax treaty with Costa Rica.
Seriously, no treaty.
No income tax treaty. This creates a real potential snag for U.S. citizens there. You're basically relying on the U.S. foreign tax credit, or that specific tax exemption under Costa Rica's own digital nomad visa rules. It limits your options if things get complicated. Canada, on the other hand, does have a tax treaty with Costa Rica, so Canadians have that extra layer of protection there.
That's a massive difference. And it brings up another point, those pesky U.S. reporting forms people forget.
Hmm.
Even if the FEIE wipes out your U.S. tax liability, you might still need to file things. Like the FBAR, right? FinCon Form 114, that's if your foreign bank accounts combine total over $10,000 at any point during the year. And then there's FTC reporting Form 8938 for reporting foreign financial assets if you hit certain thresholds, which are higher for folks living abroad, like $200,000 for single filers. The penalties for not filing these can be really steep.
Absolutely brutal penalties, which just underscores the main message here. Meticulous record keeping is non-negotiable. Keep track of your travel days, keep copies of leases, local tax payments, everything. It's your defense.
So yeah, the digital nomad dream is definitely alluring. But the financial side, the tax reality, it really demands you be proactive and make informed choices.
Totally. Where you choose to go, which visa you get, how you handle ties back home,
Right.
it all has potentially huge tax consequences.
It leaves you wondering, right, can you really have that awesome, low-cost, adventurous life abroad if you haven't first figured out the financial rules of the game?
And helping you figure that out, building that dream on a solid legal and fiscal foundation. Well, that's what we aim for in this deep dive, making sure you're empowered.